Welcome back to AF Tech Trades. Today, we're diving into an exciting opportunity on the US dollar to Swiss franc pair. If you're serious about catching profitable trades, you've come to the right place. In this video, I'll walk you through a trade setup that's unfolding right now, complete with exact take profit and stop loss levels. By the end of this video, you'll have a clear plan to maximize gains from this move, so make sure to stick around to get the full picture. And while you're here, don't forget to subscribe to AF Tech Trades, like this video, and share it with your fellow traders. Let's help each other seize these opportunities. Market Situation Overview. Let's kick things off by taking a close look at the US dollar to Swiss franc pair on the 30-minute timeframe. What we're seeing here is a classic triangular pattern, a formation that often precedes significant market moves. Right now, the market is sitting at 0.86246. Which is an interesting level given the recent breakout. But before we jump into the take profit and stop loss levels, let's take a moment to understand why this pattern is so important. Understanding the triangular pattern. A triangular pattern is a technical setup that traders look for as it indicates a period of consolidation followed by a breakout. Picture this: the market has been moving in a tightening range, with lower highs and higher lows. It's like a coiled spring, gathering energy, waiting to release that energy in one direction. When the price finally breaks out of this triangle, it often signals the start of a strong move either up or down, depending on the direction of the breakout. In our current scenario, the breakout is to the downside. This tells us that the bearish forces are taking control, which could lead to a continuation of the downward trend. Now, some might wonder, why does this pattern matter? Well, by recognizing this pattern early, you can position yourself to ride the wave of momentum that follows the breakout. And that's exactly what we're aiming to do with this trade setup. But it's not just about recognizing the pattern. It's also about understanding the psychology behind it. When a triangular pattern forms, it represents a battle between buyers and sellers, with neither side able to take control initially. But as the range tightens, one side eventually overpowers the other, leading to a breakout. In this case, the sellers have won, and that's why we're looking at short positions. Understanding this psychological aspect gives you an edge, as you're not just trading lines on a chart, but you're also trading the sentiment and emotions of the market participants. First take profit target. Now, let's talk about our first take profit target, which is set at 0.86101. This level isn't just chosen at random, it's a critical support zone that has been tested multiple times in the past. Support levels act like floors in the market. When the price reaches a support level, it often pauses or bounces back because buyers step in at these levels, seeing them as good entry points. But when a support level is broken, it can turn into resistance, pushing the price even lower. That's why we're targeting this level first. It's a safe spot to lock in some initial profits while keeping risk low. Think of it like this: by taking profit at 0.86101, you're essentially securing gains while giving yourself the flexibility to stay in the trade if the market continues in your favor. It's a way to build confidence in your trading decisions, especially when the market is volatile. And remember, trading is not just about making money, it's about managing risk and protecting your capital. That's why this first take profit level is so crucial. It's a balanced approach to capturing profits without being overly aggressive. Second take profit target. Moving on to our second take profit target, which is set at 0.85854. This level is particularly important because it sits just before a major support area. By targeting this level, we're looking to capture the bulk of the market's downward momentum. Why do we place our take profit just before major support? The answer lies in understanding how the market behaves around these key levels. When the price approaches a significant support level, there's often an influx of buying pressure as traders look to enter the market at what they perceive to be a good price. This buying pressure can cause the price to reverse or at least stall. By placing our take profit just before this level, we avoid getting caught in a potential reversal, securing our gains before the market has a chance to turn around. It's a smart way to trade, especially in a market that can be unpredictable. We're not trying to squeeze out every last pip, rather, we're aiming for a high probability exit that maximizes profit while minimizing risk. Another thing to keep in mind is that trading is as much about psychology as it is about strategy. By setting this second take profit level, we're not just following technical analysis, we're also considering the psychology of other traders. We know that others are likely to place their orders around this support level, so by exiting just before it, we're staying one step ahead. Third take profit target. Finally, we have our third take profit target set at 0.85616. This is where we anticipate the downward move might start losing steam. It's important to understand that as traders, we're not trying to predict the exact bottom, we're simply trying to exit the trade at a level that offers the best risk-to-reward ratio. The 0.85616 level is chosen because it's a point where we expect the market's downward momentum to diminish, at least in the short term. Why is this level important? Because markets often move in waves. After a strong move, there's typically a period of consolidation or retracement before the next big move happens. By setting our third take profit at this level, we're ensuring that we're out of the trade before any significant retracement occurs. It's about being proactive rather than reactive. You want to be in control of your trade, not at the mercy of the market's whims. At this level, we're maximizing our returns while reducing the chances of giving back our profits. Remember, in trading, it's not about being greedy, it's about being smart. By exiting at this level, we're locking in profits from a significant move without exposing ourselves to unnecessary risk. Stop loss placement. Now, let's talk about risk management. Our stop loss is set at 0.8686, which is just above the recent highs. Placing your stop loss at the right level is crucial, it's your safety net, protecting you from significant losses if the market doesn't go as planned. In this case, 0.8686 is a strategic level because it's above the last significant high, meaning that if the market reaches this point, it's likely that the bearish trend has reversed, and it's time to exit the trade. Why is stop loss placement so important? Because it allows you to manage your risk effectively. No matter how confident you are in a trade, there's always a chance that the market will move against you. By setting a stop loss, you're defining your maximum loss upfront, which is essential for long-term trading success. It's about preserving your capital so you can live to trade another day. And remember, a stop loss isn't just a number, it's a key part of your overall trading strategy. When setting your stop loss, you want to ensure it's at a level that makes sense technically but also gives the trade enough room to breathe. In other words, you don't want to set it too tight, as you might get stopped out by normal market fluctuations, but you also don't want to set it too wide, as that would increase your risk. The level we've chosen here, 0.8686, strikes a balance between these factors, providing enough protection without being overly restrictive. Conclusion. So, that's the full breakdown of this US dollar to Swiss franc trade. We've covered the market situation, the technical setup, our take profit targets, and the all-important stop loss level. If you found this analysis helpful, make sure to subscribe to AF Tech Trades, like this video, and share it with your trading community. I'd love to hear your thoughts. Are you trading this pair? Do you have any questions? Drop a comment below, and let's discuss. Remember, trading is all about being prepared, managing your risk, and making informed decisions. Let's secure these profits together, and I'll see you in the next video. Disclaimer. Before we wrap up, a quick disclaimer: the content of this video is for educational purposes only and should not be considered as financial advice. Trading involves significant risk, and you should only trade with money that you can afford to lose. Always do your own research and consult with a licensed financial advisor before making any trading decisions.